Assalamualaikum and hi, my name is Muhammad Akmal bin Aminuddin, and today we are going to present about the fraud cases, which is Olympus case. In this presentation, we are going to explain and present about the introduction, fraud happen, pressure opportunities, and rationalization, the consequences imposed on Olympus scandal, and the last one, conclusion and opinion. So, first of all, what is accounting fraud? Accounting fraud is the intention to manipulate financial statement by creating or hiding corporate transactions. Accounting fraud also may create false appearance of financial health as it is manipulate data. There are many ways to commit accounting fraud, such as falsely recording income or expenses as capital expenditures. It can use investors to lose money, workers to worry about their jobs, lenders to have trouble getting their money back, and people to lose faith in the financial markets. Fraudster can use weak internal controls, get around system checks, or work with others to hide what they are doing. Auditors are in charge of making sure that the financial accounts are correct, but they could be tricked or forced into ignoring problems. Legal effects include governmental investigations, fines, and the possibility of criminal charges against those involved. Equity fraud has a big effects on many people, including investors, workers, creditors, and people trust in the financial market as a whole. So the first one is tone at the top. The definition of the tone at the top is to describe the performance of management and board of director. Is it they are going to be honest and ethical, or dishonest and unethical? It is important for the management and the board of director to be honest and ethical, to build trust and lower risk. So, referring to the Olympus case, in 2011, rumors started to spread that Olympus had been doing bad accounting for more than 20 years. People say that they broke the law and keep hiding its losses by moving the financial tools related to its unrealized losses to different funds that were not part of the Olympus group. The accident got attention from people all over the world, especially after Michael Woodford, who was CEO and president of Olympus at the time, was kicked out by the board of directors. The Financial Times wrote a full story about the incident after he was fired, and Woodford filed charges against Olympus with the UK Serious Fraud Office, which is SFO. So, uh, referring to the Olympus cases, it is very obvious that Olympus lacks good business governance or openness regarding the cases. Poor leadership made it impossible to encourage openness and honesty in financial reports, and also the company's use of complicated financial methods to hide losses show that it fails to provide stakeholder accurate and honest information. According to the scandal, the company's corporate governance system had some holes that let fraud happen because the internal controls are not working uh, good. So, when the scandal happened, Olympus changed its leaders to fit the problem and fit its image. Next, asymmetric information. Asymmetric information called as information failure, which is one party to an economic transaction possess greater material knowledge than other party. Uh, it may take advantage of buyers because asymmetric information exists. So, referring to the Olympus case, the Olympus case brought attention to the concept of information asymmetry. This occurs when specific individuals in a company, like executive and the top management, have information that is not readily available to all stakeholders such as investors and the public. Information asymmetry played a major role in the scandal because it caused a difference between what the top executive knew and what was shared with the public and investors. The company's lack of transparency might have caused people to have a wrong idea about how well the company is doing financially. People who work for the company probably have a better understanding of what's really going on than people who are not involved with the company. Furthermore, the presence of information asymmetry has the potential to undermine trust and confidence in financial markets. This is because investors highly value accurate and transparent information in order to make well-informed decisions. So, the Olympus case highlight the significance of dealing with information asymmetry by implementing regulatory measures, enhancing corporate governance practices, and promoting transparency. In the end of the day, after the scandal, there have been suggestions for reform to improve corporate governance and decrease information asymmetry. Thirdly is the role and responsibility of board of director as mentioned in agency theory. First of all, agency theory incorporates corporate governance that highlights is a concept that highlights the connection between shareholders and management. It places importance on the need to align their interests by implementing different mechanisms. The Olympus fraud case served as an illustration of the board of directors' fiduciary duty, which is to prioritize the interests of shareholders. This duty involves safeguarding investment and reporting ensuring the financial reporting is conducted with transparency. So referring to the Olympus case, the board's oversight did not effectively deceptive accounting practices that misrepresented the company's financial condition. The failure in risk management processes shows that the board has a responsibility to actively identify and decrease risks associated with fraudulent activities. Hence, agency theory is a concept that places strong emphasis on ethical leadership. It highlights the importance of aligning the interests of executives with those of shareholders. So it promotes the idea of fostering accountability and transparency within organization. Hence, the Olympus case highlight the importance of implementing regulatory and governance reform. Fourthly is human bias and personal interest. Uh, Human bias and personal interest is basically conflicts that may occur when individuals prioritize their personal interests above the interests of shareholders or principal. According to this theory, it is recognized that individual motivation can sometimes cause individuals to make choices and take actions that do not align with the goal of maximizing shareholder value. Referring to the Olympus cases, the Olympus scandal occurred when the company's executives were swayed by their own bias and personal interests, resulting in the adoption of misleading accounting methods. The executive might have been motivated by self-preservation, maintaining the stock price, and personal financial gains. This could have resulted in them manipulating financial data and presenting misleading information about the company's financial health. So, the Olympus case highlights the significance of recognizing personal biases and ensuring that executive interests are in line with shareholders' interests in order to avoid corporate governance failures. So it means strong governance mechanisms such as internal controls, ethical leadership, and independent oversight play a vital role in preventing situations where personal interests might jeopardize the integrity of financial reporting. So lastly, which is fiduciary duty of the board of director. It means the fiduciary duty of board of directors is a legal and ethical obligations. It requires board members to prioritize the well-being of the company and the interests of the shareholder. One of the duties that board members have is the duty of loyalty. This duty means that they need to prioritize the company's interests above their own personal matters. Another duty is the duty of care, which means that board members need to make well-informed and thoughtful decisions. The last one is the duty of obedience, which is it necessitates individuals to comply with relevant laws, regulations, and company governing documents. This responsibility includes making strategic decisions, overseeing finances, and evaluating executive leadership.
Hi, my name is Mama Arif Azlan bin Zaimi. I want to present about fraud happened in Olympus. First fraud is concealment of losses. The executive engaged in a prolonged effort to hide substantial losses incurred through risky investment. The use of off-balance sheet entities, such as dummy entities and shell companies, was a deliberate strategy to keep these losses hidden from the public and regulatory authorities. The second fraud is manipulation of financial statement. The executive exploit accounting standards and engage in aggressive financial maneuvering to avoid recognizing the actual market value of impaired assets. This manipulation involved creating a complex web of transactions and entities to distort the true financial position of the company. Third fraud is excessive merger and acquisition advisory fees. Concerns were raised by the payment of excessive merger and acquisition advisory fees. These fees were used as a way to further conceal the fraudulent activity while also serving as a means of diverting of revenue. Who is the whistleblower in Olympus Japan case? The initial whistleblower is Yamaguchi Yoshimasa. Yamaguchi's article was released as a cover story in the Japanese monthly magazine Facta, revealing in detail that in 2011 Olympus was involved in an illegal practice of hiding financial losses and running among with senseless merger and acquisitions. Former financial reporter which is Abe, magazine Facta had actually sent a letter to Olympus PR office requesting an interview with the president, which is Kikukawa, but he was refused and his inquiry concerning the irregularities was ignored. And the main whistleblower was Michael Woodford. Woodford tried to support his case by using the Japanese video sharing website, which is Nico Nico Doga, as a democratic medium, through which he communicated directly with the Olympus employee with no media gatekeeping restrictions. Equally important, one former board member of Olympus, which is Miyata Koji, launched an online petition supporting Woodford's case in order to sway public opinion in Japan. The most important media exposure, however, was Woodford's appearance at the Japanese National Press Club.
Assalamualaikum warahmatullahi wabarakatuh. My name Muhammad Arif bin Saiful. I would like to explain about the consequence on Olympus scandals for the auditor, company, management, shareholder and any relevant parties. Okay, for the first auditor, Ernst and Young Shinihon faced criticism for missing Olympus accounting fraud, raising doubt about their audit effectiveness. KPMG SSA stressed on regulatory adherence during the handover, cooperating in investigation. A serve penalty could harm the auditing industry, already shaken by past scandals. For the question about the regulatory effectiveness aroused, damaging the auditing profession overall reputation, already impacted by past industry scandals. Okay, second for the company, Olympus faced significant financial losses due to allegation of misconduct and illegal activities, causing a decline in the stock value. So Olympus admit to using a loss hiding arrangement to cover investment losses, leading to loss of investor confidence and a drop in company stock value. Regulatory authorities took a legal action against Olympus, so imposing fines and penalties for its involvement in accounting fraud. For the management, after the controversies, top officials, including the president and CEO, either resigned or were fired, causing a major shakeup in the company's leadership. Michael C. Woodford's differing views on direction and methods created decision-making challenges, causing disruption within the management team. Executive directly involved in fraud face charges, leading to the legal action and prison sentence for some after being fraud guilty. For the shareholder, Olympus stock sharply dropped, causing substantial financial losses as market capitalization fell from 673 yen billion to 422 yen billion in a day. Analysis lowered stock ratings due to the concerns, reflecting widespread apprehension among stakeholders about Olympus situations. Shareholder and Olympus for compensation, alleging investor deception and seeking accountability from board's management and the auditing firm for the damage. For any relevant parties, Olympus fraud penalties from the Japanese Financial Services Agency and other regulators, leading to enhanced corporate governance activity measures. The controversy separate discussion and changes in Japan's corporate governance and financial reporting practices. Following the Olympus scandal, regulators intensified investigations in other companies to prevent similar fraudulent practices.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Irsyad Razin. So, right now I will be explaining about the pressures, opportunity and rationalization. Okay. For the pressure, we have financial pressure and also fear of loss of face and lack of oversight. Okay, for the financial pressure, Olympus operating income fell significantly because of the sharp appreciation of the yen in 1918. The executive vice president, which is Mori, and standing corporate auditor, which is Yamada, invest in high risk, high return product and risky financial product that offer interest advancement and complex structure bonds in order to save the company. But all the investment become lost and Olympus has reached nearly one 100 billion yen. Even though they had lost, Yamada and Mori continue to bet money in risky investment in a desperate bid to recover all the losses. So, in my opinion, Yamada and Mori should invest in investment scheme that is low risk even though the return will be less compared to the high risk. Just because the low risk will not give the huge amount of profit doesn't mean that it is not profitable. They should slowly and patiently overcome the losses incurred in the company. Okay, for the second pressure is the fear of loss of face. Because of the company already suffer huge amount of loss, Yamada and Mori come up with a loss separation scheme to cover all the losses. In this scheme, the worthless financial asset of Olympus had bought would be transferred to organization whose account would not be merged back into Olympus financial statement. This scheme include in selling asset to parties that will accept them at book value. This step is necessary to create the dummies entities so that Yamada and Mori can use to hide all the losses. So, in my opinion, in this case, Yamada and Mori should be transparent with the losses in the company and should not create any scheme to cover all the losses incurred. By being transparent, any bias action can be prevented and financial advisor can help them to recover the profit for the company. Okay, for the third pressure, which is the lack of oversight, President Moyama approved the scheme that Yamada and Mori created in order to hide the losses they incurred by selling all the assets to parties that would accept them at book value, thus making a dummy entities to hide the losses. And in my opinion, President Shimoyama should have questioning in mind and ask Yamada and Mori deeply about the scheme they about to create before give his approval. And by having questioning in mind, it will help President Shimoyama to detect if there is any fraud happen in the company. Okay, so let's moving on to the opportunities. For the for the opportunity, we have two, which is financial gain and preserving reputation. Okay, so the first opportunities is financial gain. By committing fraud, Yamada and Mori believe that they could gain a lot more income to the Olympus and protect their investment to secure bonus tied to the company's performance. Surprisingly, this scheme gave a positive impact to Yamada and Mori because they succeeded in hiding the asset with a combined book value of 64 billion yen. And the second opportunity is preserving reputation. Yamada and Mori knew they needed to find a way to make the losses disappear. So in order to do that, they set up a disposition scheme, which is the loss disposition scheme involved the purchase of startup entrepreneurial venture at vastly inflated price and payment of huge advisory fee for merger and acquisition deals. They use the part of the money that flow out of Olympus for this inflated purchase to retire the loan from the banks that finance the dummy enterprise, thus making the transaction accounted for as a goodwill. Yamada and Mori believe they were golden because the goodwill would be amortized over the time down to zero. Then the money that Yamada and Mori lost on bad asset was transferred to the receiver fund, which is could be properly accounted for without anyone's knowledge. Okay, moving on to the rationalization. For rationalization, we have two, which is noble cost rationalization and action taken to file the fraud. Okay, for the noble cost rationalization, Olympus external auditor KPMG did not agree with the vastly overvalued goodwill in the Olympus Japan. Other example is when Olympus appointed British CEO Michael C. Woodford, and Woodford immediately began questioning all the transaction in the scheme Yamada and Mori created. Uh, but Woodford was fired 2 weeks later after attempt to rectify the discrepancies with the books. So, in my opinion, all these measurements took by KPMG and Woodford are wise in order to detect any fraudulent happen in the company. Okay, for the last is action taken to file the fraud. In 2012, Olympus is suing its current president and 18 other past and present company officials over the scandal, seeking up to 3.6 billion yen in compensation for the accounting scam. Later, Olympus' former chairman, Su- Tsuyoshi Kikukawa, two other former executives, which is Yamada and Mori, and three men from consulting companies who allegedly collaborated in the scandal was arrested by Japanese prosecutors. So in my opinion, action taken by Olympus to arrest all the offender is a good action because the company has suffered a lot of losses in such a long time because of fraudulent scheme. The action taken also to ensure that there is no fraud happen in the future and can be used as a lesson to the new chairman and executive.
Okay, so the conclusion from this case study is a story of corporate deceit, excessive greed, and a stunning breach of trust is the Olympus crisis. The lawsuit, which covers several decades, exposes the company's deeply rooted culture of financial fraud. The role of auditors draws attention to any possible flaws in the supervision and auditing procedures. This is especially true of KPMG and subsequently Ernst and Young. Michael C. Woodford hiring as president and CEO was a game changer since he briefly revealed the fraudulent activities. The fallout, which includes the ac- legal actions, financial penalties, and criminal accusations, highlight how the serious the misbehavior was and how far-reaching the effects were. Okay, in my opinion, uh, in case like this is highlight the necessity of strong regulatory frameworks, watchful auditors, and a transparent company culture. It also highlight how important it is to protect whistleblowers from punishment and their vital role in exposing wrongdoing.
Okay, right now I will be explain about one wisdom. Based on the Olympus Japan fraud case, one wisdom that our group like to share is the critical role of corporate governance and ethical leadership in maintaining the integrity of a company. What we can learn or highlight from this case is the effect or consequences of poor corporate governance and corporate culture that discourage speaking out or telling the truth to the right authority about all the wrongdoing that happened in the company. As for someone who would like to work in a company, one must follow all the rules regarding the corporate governance when doing their work. Doesn't matter if you are in the lower management or upper management. Following the rules and not breaking it by committing fraud is the most important thing you must do. We must be transparent to our management if we have done any wrongdoing because it is good for you to tell the truth than telling lies. One exemplary that we can take is when Yamada and Mori, based on the Olympus Japan fraud case, did not disclose all the loss that the company have incurred. But they come up with the scheme, which is a fraud behavior, to save the company and make everyone believe that the company is actually gaining profit rather than loss. This fraudulent step that Yamada and Mori executed is also an example of poor ethical leadership in maintaining the integrity of a company. So, after understanding the case that happened, as a honest worker and future corporate employee, we must take precaution in everything that we do in our workplace. Having a high rate of precaution can save us from commit anything that can be a burden to us, such as fraud. We hope that our group's wisdom is suitable for your reading. Thank you.